Welcome to the Account Solutions. This channel is dedicated to bring you solutions to your everyday tasks in areas of bookkeeping, business administration, accounting, and taxation. If you like what we're doing here, kindly click on the subscription button and support us. Enjoy the rest of this tutorial.
Call me the accountant. You sent for me, yes? Sir? What is this? What nonsense is this? What happened? I pay you so much and yet you do nothing for me here. This is the report you sent to me yesterday by mail. And your bank balance is telling me you will have 10 million naira in the bank. I sent a check to the bank this morning and the check bounced. What kind of embarrassment is that? You should have run the check by me, sir. Are you out of your mind? I should run a check by you first. And now my supplier will think that I'm not serious. Sir, let me explain what happened. I should run a check by you first before I send. Are you out of your mind? Are you out of your mind? This is incompetence in the highest order. See, the balance you have here is the bank book balance. Go ahead. In my letter. Tell me. It is 10 million naira. But that yesterday I did this report to you. I had received a payment advice from XYZ Limited, and I thought the money should have been that. Look at you now. I was able to reach you to check if the money has entered the account. So I believe that by today it will enter. So it is the book balance that is in the report. By the time the money hits the account, it will be 10. I can't even believe that I'm still standing here listening to you. Bank balance. So it's just that I did not prepare a reconciliation sheet to reconcile the difference between the bank book and the bank statement balance. You did not do your job well. You should have given me a reconciliation sheet. I'm sorry, sir. Please, my friend, just go. What kind of accountants do we have these days? What? Tom, which school did you even attend? I'm sorry, sir. It won't happen again, sir.
No, don't be like that accountant. Hello everybody, welcome to the Account Solutions. My name is Otta Omar Ben. Today on Do You Know, I'll be talking to us on bank reconciliation statement.
Do you know? Do you know?
Bank reconciliation statement. You might have probably heard about this concept in accounting. It's very important, very important, and important that this exercise is carried out always in any organization. Bank reconciliation can save your business from embarrassment and fraud. It is an important internal control exercise that is a business saver. Now, it is a process of comparing the transactions that you have carried out during a period as maintained by the bank. That is your bank statement. When you issue a check to the bank, when you pay money, when you receive money into your bank account, the bank keeps their own records. The records the bank keeps is translated into your bank statement, and the bank statement is made available to you as you request on a monthly basis. Now you're comparing the transactions in the bank statement with transactions that your accountant or the bookkeeper has maintained in the books of the account. So as you're sending a check to the bank is recording your transactions in their own records, while your accountant or bookkeeper is recording the same transactions in the company books. So at the end of the period, let's say a month, the company accountant or bookkeeper requests for the bank statement. He or she compares the transactions in the bank statement with the transactions he or she has kept in the cash book, bank book, or general ledger. Now, what are the things that could trigger a reconciliation? First of all, it is important to reconcile, whether anything triggers it or not. Number one is maybe there is differences in closing balances. The balance in your bank statement is not the same with the balance in your bank book. The balance in your bank statement is not the same thing with what you have in your bank ledger. Then it calls for reconciliation. Or you are suspecting that you're getting so much bank charges alert, excess interest alert, and you want to investigate why the bank is charging you for so much. You can call for what? A reconciliation. Or there is a dispute either with a customer or a vendor over payments, over receipt of inflows, and that dispute can lead to a bank reconciliation. And finally, policy. It could be the policy of the company to reconcile the bank account like I said, policy or no policy, every accountant, every bookkeeper should reconcile bank statements on a periodic basis. Most people do a monthly reconciliation, but depending on how big your transaction is, it can be weekly, it can even be daily, based on your transactions. The rule is don't leave it for so long. Don't leave it for so long. You must check the figures in your bank statement with the figures you have recorded in your own bank book in the office. Now, during a reconciliation, what happens is that the total deposits in the bank statement are compared with the records of receipts in the bank book. The total withdrawals in the bank statement are compared with total payments recorded in the bank book. Usually, the starting point for every reconciliation is the balances, the closing balances. If the difference between the bank balance and the bank book is the same, most times people will not need a reconciliation because my bank balance is the same with my bank book. And with the online transfer these days, mobile banking, online banking, accountants have access to the bank platform, so it's even easy to check the balances or to check transactions through the bank platforms and just update their bank book. So most times these days, the balances in the bank statement are almost the same thing what we'll have in the bank book. However, even if the balances are the same, but for purposes of internal control, internal audit, external audit, there may be a need to also reconcile the bank statement with the bank book. And this can also reveal if there are any unauthorized payments, unauthorized withdrawals from the account, or bank charges that we did not capture during the month. This reconciliation can reveal. So even if the balances are the same, you can still reconcile the bank statement, to look out for other issues that could save your business from either potential fraud. Benefits are that you could actually spot errors when you reconcile your bank account, and it can help you to prevent fraud and detect fraud earlier enough before it gets also helps you to track on recorded transactions. You're up to date with the accurate bank balances in your bank account, and all transactions are adequately captured in your general ledgers, and it helps you to update your bank charges and interest on loans. And it's also very good for proper cash management planning. If you fail to reconcile or to prepare a bank reconciliation statement periodically, you could expose the company to fraud, to unauthorized withdrawals, if there are any, especially with those that have large transactions and they have so many bank accounts. They could be exposed to excess bank charges that will continue for a long time if it goes unchecked. We've had cases where companies sue banks for excess bank charges. It's because they've allowed they failed to reconcile the account for over a long period of time, and when they realized it, the bank had charged them so much bank charges and interest on loan without them knowing it. So it's good to reconcile your account, and like you saw in the short clip, it could cost your company an embarrassment. When you think you have money in the account and you issue a check through that account, it could cause an embarrassment. Now I know we now have, like I said earlier on, online platform where the cash officers or those in charge of cash and bank, they can easily view the bank balances, and pay. But you can never tell. It's always good to reconcile your bank account at the end of every month. It's very important you do so. To reconcile your bank account, you must get the closing balances in the bank, extract it, get the closing balances in your cash ledger, extract it. So when you obtained your bank statement and you have your general ledger, that's your bank book available, you've extracted the closing balances of both statements, what you will now do is, first of all, start with the payment, or payment or lodgement. But let me go with payment. You will compare all the debits in your bank statement with all the credit in your bank book. It means compare all the withdrawals that the bank has recorded in the bank statement. The withdrawals are what we call the debits in the bank statement. Compare those transactions with all the payments that the accountant or bookkeeper has recorded in the bank book, which are the credits. So in the bank book, you are comparing the credit in the bank book with the debit in the bank statement. Credit in the bank book with debit in the bank statement. You compare them side by side. Now you list out all transactions that could be in the bank book but not in the bank statement, or could be in the bank statement but not in the bank book. So what it means is that there could be transactions in the debit side of the bank statement that should have been on the credit side of the bank book but are not there. You list them out. Or there are transactions in the credit side of the bank book that should have been in the debit side of the bank statement but are not there. You also list them out. When you are done with that, you now compare all credits lodgements in the bank statement. Compare all lodgements, which are credits in the bank statement. Compare them with all receipts, which are debits recorded in the bank book. Compare all credits in the bank statement, which are lodgements, deposits in the bank statement, credits. Compare them with all receipts, that's debits, in the bank book. There could be debits in the bank book that should have been credits in the bank statement but are not there. And there could also be credits in the bank statement, that's lodgement, that could have been debits in the bank book but are not there. So you extract all this and list them out in a schedule. Receipts that have been captured in the bank book, that is inflows, like we saw in the short skit. Inflows that have been captured by the accountant in the bank book and they are yet to reflect in the bank statement, that are called uncredited checks, for those that use checks to transact. And payments that you've recorded in your bank book but yet to reflect in the bank statement are called unpresented checks. You can call it transfers that has not gone through for either inflow or outflow. Now also note that for online transfers, you can also have reversals of entries. Payment you've made to your vendors or to your employees that reversed back to the account. This will also cause discrepancy between the two, statements, or inflows that your client had paid to you and giving you a payment advice, but they reversed, back to your client. This can also affect the balances, in the bank statement and the bank book. Deposits in the bank statement that are not captured in the bank book are called receipts not recorded in the bank book, and receipts captured in the bank book but yet to reflect in the bank statement will be called uncredited lodgements. Remember, you could have the case of reversals for online transfer. Now in closing, once you've listed out all the discrepancies between these two statements, that's your bank statement and your bank book, what you need to do is to reconcile it. You either update the transactions from the bank statement to your bank book. If there are items in the bank statement that are not on the bank book, you can update them before you issue out your report to management. And if there are transactions in the bank book that are not in the bank statement yet, you can list them in your reconciliation statement, showing the balances between the two accounts and what would have caused them not to balance. At the end of the day, your statement should have the closing balance of either the bank or the bank book. So you can start from balance as a cash book and end with balance as per bank statement, or you start with balance as per bank statement and end with balance as per bank book, as I will show you in the Excel sheet I will use to just show you a small template. So let's go into Excel, and I'll use a small template with design to show you how you can use a customized template to balance your account every month, every week, as the case may be. So if you don't want to go into the hassles of creating a template yourself, you can reach out to us for this template. I will demonstrate how it works and how it can easily help you to reconcile your bank statement when you want to do so. Thanks for watching. See you. So we are now in Excel. This is the template we've designed to enable you to reconcile your banks. So how do you use this template? First of all, you go to setup and set up the name of the company, the months you want to reconcile, select from the drop down, the period, is it this year or last year, and the currency. Prepared by, type the name of the person preparing the statement, who will review, type the name, and who will approve. Then we have all the banks in Nigeria. If you're outside Nigeria, you can change this by deleting everything here and just type in your own banks in your country. So that's how it's being done. Once you are done, you go to the banks and set up the banks here. So I'll start with the name of the company, the month and the period. I'll just fill up all these places where it's very important to do this. So I've entered the company name, the month that I want to reconcile, and the year. I've typed in the currencies. You can add more currency here. I've typed in the name of who is preparing the reconciliation, who will review and who will approve, and I have my updated bank list here. Once I'm done here, I'll go straight into the banks. I'll select my first bank. Let's say is Wema Bank, for example. Let my Wema Bank. The currency is in Naira. Then the name in the bank ledger or my account, my chart of account, name is Wema NGM, for example, and the account name is the name of the company. So I'll just copy and paste here. So you type the opening balance to have my company name, the account number. You type the closing balance in the bank statement for that month. Let's say it is 450,000, and the closing balance in my cash book for that month is 550,000. Then you can put the branch location, the account officer, phone contact, email, and we have a bank account detail which is Wema NGM and the last 4 digits of the account number. So you populate for other banks, select the bank and the currency and the rest of them. So I have 4 banks I want to reconcile. You can add more banks. I have 4 banks, currency, the bank account name in the chart of accounts, you have the account name in the bank, the account number, then very important, the closing balance in the bank statement and the one in the cash book. You can leave all these ones empty and we now have our bank account details. So I want to reconcile these 4 bank accounts at the end of March. Once I've done this setup here, everything is fine and the banks here are okay. Go to your statement and you will see it populate the company's name, Opacha Construction Nigeria Limited, as at 31st March 2021. I'll now come here and select only the bank I want to reconcile. So I'll select Wema and it populates all the details I need to populate, and I will select my option. Do I want to start from balance as per bank book or balance as per bank statement? I'll just choose anyone, but let's stop here. Let's wait here first. Now I'll go to my unpresented. I will list out all my unpresented checks. I'll go to my uncredited. I will list out all cash inflows in the cash book that are not in the bank statement. I'll go to this lodgement. I'll list out all lodgements in the bank statement, not in the cash book. Then payments, I'll list out all payments in the bank statement, not in the cash book. And here I'll list out all the bank charges I will not capture. Once I've done I'm done with listing out all these schedules. I am done with my reconciliation. Once I'm done with all these schedules, I am done with my what? Reconciliation. Let's select. I want to start from balance as per bank book. Select this. You see, you have the balance as per bank book will appear, and all the criteria you need for reconciliation will also appear here. And you have a closing balance, which is wrong. So you see this is wrong. Let's go and key in all the unpresented, all the uncredited, all lodgement not seen in the cash book, and the same for payments and charges. Once we've keyed this in, it will balance this sheet. So in this sheet, all you need to do is to select the bank, change this bank, give you the balance of this bank. You see the one down. So this one has no issue. This one is balanced, so there's no issue here. Just save. You can save as, or you print. You can print as PDF, or you save as. Then if let's check the other bank. Let's check this one, Eco Bank. This one has issues to reconcile. You need to go and check, compare your bank statement with your cash book and find out where the issues are coming from. Let's check the last one. This one, USD, it has no issue to reconcile. Just go to File, Save, or File, Save as, or you print, or save as PDF and keep. Okay. So please, before you change this, if you have inputted any schedules for any bank, please try and clear all of them by clicking this button before you now change the reconcile on that bank. But you must print out or save as PDF for one bank before you clear the schedules and reconcile for another bank. Let us go to we have issues with this one has issues, and the first one also has issues. Out of 4 banks, 2 banks are not balanced. Let's do the first one, Wema Bank. We have 100,000 naira difference in our balances. So just go to the bank statement compared to our cash book and list out all that we can find that relates to this sheet, and we'll put them there. So I have an item. After comparing my bank statement and my cash book, I've compared the withdrawals in my bank statement as a debit with the payment in my cash book as a credit, and I've seen that there is one item which is cash outflow in the cash book that was not captured in the bank statement. Is 1 million naira from Okala Oba. I've captured it here, and the remarks is reversal of transfer. Here I have an amount that was recorded in the cash book but not recorded in the bank statement from Ozo Asaga International Limited, and I've listed out 3 million naira here. You can have more, up to 35 items. I have lodgement that is in the bank statement, but I don't know why it was not captured in my cash book. Maybe I need to ask the MD. I didn't get an alert from the bank. So it's 3 million naira from ABM Limited. I'll list it out here. You can list more and more. We now have payments that I saw in the bank statement, and for whatever reasons I did not capture it in my bank book or my cash book. I will list them. We have 100,000 naira from Ozo Ubi Nigeria Limited and Opai Limited. I have those 2 figures here, and there's a sum total, of what you added in the schedule. And I have some bank charges that did not capture in my cash book. I've put them all here, and at the end I will go to my statement, and you can see all those figures will appear here, and boom, my statement has balanced. I just come here, I'll see authorization prepared by Olama Idika. Remember, doing setup, we put those names here. Prepared by, reviewed by, approved by. You can make some comments here if you want. Just type some comments as you like, why you have this statement. So you can say, please see schedule, please see schedules, you can type that and fine. Here is just some instructions that you need to look at. If you observe that there are outflows, withdrawals in the bank statement that you didn't capture in your cash book, it's just good for you to just post them at once into your cash book. Except there are disputes or you don't know what those payments were for, you now put them in your bank consultation statement. The same thing for cash inflows. If there are inflows in the bank statement that are not in the cash book, you can just post them to the cash book if you know what they are for. But if they are in dispute or you don't know what they are for, you can now leave them in your consideration. So once you populate all these schedules with the right figures, your bank statement is reconciled. Boom, boom, boom. No stress. You can do this in just 1 hour, 30 minutes. You are done with everything. as long as you compared your bank statement with your cash book well, and you list out all these schedules, list everything out, you are good to go. You can now print this, or you save. Please try and save this, save the schedules, save all the schedules. So you are printing this 1, 2, 3, 4, 5, 6 statements. You are printing them out or saving them in one PDF and putting in your folder, either soft copy or hard copy, but you've done this conciliation. Thank you so much for watching. So if you want more explanation, more tutorials on how to use this Excel template to reconcile your bank, then you should look out for the next video on bank reconciliation statement with automated Excel template. Thank you. See you next time. Bye.